know that Canadians pay at least 55% of their hard-earned income in various forms of taxes? And are you sick and tired of working hard just to see this 55% diverted to income tax, property tax, business tax, gas taxes, HST, and many, many other taxes? Do you also know that Canadians pay another 33% of their hard-earned income to credit card companies and the banks as interest costs servicing their debt? And are you sick and tired of working hard to give this 33% to servicing debts, such as mortgages, credit cards, lines of credit, car loans, just to name a few? Altogether, this is a shocking 88% of your hard-earned income taken out of your control that goes directly to your taxes and interest payments, leaving you with only 12% to live on. Can you really live on 12% of your income? Today, the average Canadian spends $1.42 for every dollar of income. The simple math explains why 80% of Canadians are so deeply in debt. Furthermore, the financial experts are telling you that you need to budget. You need to cut back on your spending. You must lower your quality of life to make the 12% work. Is this realistic? Does this really make sense? Why have they not addressed the 88% dilemma? So here are a few more questions for you. Can you justify paying out 88% of your income to taxes and interest? Why can't you enjoy the same benefits of your income that the 20% of rich Canadians enjoy? Why should you have to deal with the daily stress caused by overwhelming debt? Why should you have to consider taking a part-time job just to make ends meet and still give more of your income to taxes? Why should you feel imprisoned and restricted from enjoying your life because you're not in control of your income? Rich Canadians enjoy a different quality of life because they're in control of their income, their taxes and debt. They meticulously and deliberately arrange their financial affairs so that they have no debt and pay less taxes in the most efficient way. You need to understand this. They control their income, their taxes, and their interest payments every step of the way. And so what do you have in return or in place to regain control of your income, to reduce taxes, and to wipe out your debt and interest costs? How can you keep most of that 88% that goes towards interest and taxes? So here are the answers to these two burning questions. They go hand in hand to give you financial freedom. In Canada, we all pay income taxes the same way. It's easy to see that by looking at your T1 General. So what does all of this mean to you? It means that you have 12 months to generate as many deductions and credits as possible so as to maximize your refund. Remember, when you file your return, it is a filing of income, deductions, and credits. If you have deductions, this reduces the amount of income to be taxed, thus reducing your overall tax. If you have surplus credits, the Canadian Revenue Agency takes these credits and applies them to your account, triggering a refund of cash. That is why it is called a tax refund. And so why is this important for you to accumulate many of these deductions and credits? Because more credits and deductions you have, the bigger the refund. There are many ways to accumulate deductions and credits during the course of the year so as to maximize your refund. But do you know how to accumulate these credits and deductions? Most Canadians are not aware of the many credits and deductions that are available to them. As a result, you lose thousands of dollars annually because you do not take advantage of what is rightfully yours. Using our unique tax strategies, we'll show you how to generate these credits and deductions to maximize your refund.